This is the briefing for Friday, February 27th. This market appears to be one in which traders cannot figure out whether value is going to be higher or whether value is going to be lower. In fact, for the last several days, it appears that there is no strength to move the market to a breakout move, which would give the indices the opportunity to go to new all-time highs instead of staying in the rotational pattern they've been in for quite some time. What does appear is that there's no selling pressure either, that when we open up down, then buyers step in, and as soon as the move to the downside is fully retraced, buyers step back and we end up in a rotational pattern. Now, this is an hourly chart of the spiders, the Qs, and the IWM representing the Russell. So you can see here, this is about 8 or 9 days of trading on an hourly basis. And you can see in Wednesday's trading, we did get a breakout and appeared that this is a short-term key reference area. So we did get a breakout and it appeared we were going to test the next upside resistance level. But that, of course, didn't occur. The next day, we got this huge move to the downside. And then, of course, a rotational pattern once back inside this area of rotation. Today, we opened up lower. Buyers stepped in and drove it up. And then we ended up spending most of the day in a rotational pattern as well. Same thing occurred with the Qs. You can see in the NASDAQ, you can see the rotational pattern all through here. False breakout, then the immediate move back to the downside rotation for the last 2 days. And the same thing with the Russell. You can see that it did not break out in the short term, but it is right in the middle of the range. And of course, we had this move to the downside in today's trading. And then, of course, the rotational pattern going into the close today. Now, looking at the internals, you can see volume was pretty big on the spiders going into the close. Not so much with the Qs or with the IWM, but the important aspect is that breadth is diverging. This is S&P 500 breadth. In today's trading, only 47 shares were trading higher as opposed to lower. But net volume is just becoming very concerning, as you can see that it is declining with each day. Look at the NASDAQ. Net volume in the NASDAQ is just absolutely collapsing to a really extreme negative position. Breadth is collapsing in the NASDAQ. In the Russell, you can see the same thing. The trend is down, but look at net volume. Net volume is really, really falling lower. That's basically net volume is up volume minus down volume. So you get an indication. Well, we can see that going into this closing, we had a really good spike in volume in the spiders. Normally you would think that would be that would give us an indication that buyers stepped in and potentially we should see more follow through in Monday's trading. However, you can see what happened with net volume. Most of it was selling volume, even though price went higher. So that is just a matter of time then, if that were to continue, if the market hadn't closed, that you would see a potential turn down with volume, more down volume coming into the market as opposed to up volume. In terms of the daily chart, this is the spiders on a daily basis. You can see the rotational pattern that the S&P 500 has been in. You can see even in a shorter term time frame, this rotational pattern here. And then, of course, we're basically right in the middle of the range, testing on all of these days, trying to break out, unable to break out to the upside above the 690, 697 area. But then again, as you can see, you get these buying tails when they try and force the market down. Buyers step in and keep it from sliding. Downside support initially in the spiders is going to come in right around the 674, 675 area, and then below that is 670. Very important area at 670, but even more important is 650. If we break 670, that's going to open up trading down to the 650 area. Volume, you can see on a daily basis. You look at this rally here, you can see what's happening with volume during that rally. It's falling off. 52-week highs minus 52-week lows, basically muted. and basically flat, but neither is it supporting a move to the upside, nor is it supporting a move to the downside. And then you can see the general trend in breadth during this rally here. There's a downward slope here. I could have put a trend line in showing that. And then net volume, of course, you can see is declining as well. In terms of the Qs, you can see the rotational pattern that the NASDAQ has been in. Lower extreme at 600, upper extreme at 640, and we're testing the lower extreme right now. Volume was basically flat. Now in yesterday's trading, we had an increase in volume as the market sold off. And then of course, today's move was on lower volume. Breadth falling off, net volume falling off pretty significantly as well in the Qs. And in the Russell, you can see rotational pattern here that was at the upper extreme of this rotational pattern. Volume basically flat, breadth falling off, and net volume falling off as well. So you can see that neither are we seeing any type of move or strength of a move to the upside, nor are we seeing anything to the downside either. We are just stuck in a rotational pattern, which is very, very frustrating. So this market, there's a lot of environmental factors out there that can affect the determination of value in the indices. And the market is really having a tough time trying to decide whether those things are going to be positive or whether they're going to be negative. So as a result, we're just stuck. We're stuck in a trading range, and that's basically the whole story. The important to this is going back to the shorter term charts and looking at the key reference areas here, that if those are broken as they were on Wednesday, and that holds and you get another test or a break of the next upside key reference area, that's going to give us a pretty good indication of the next greater degree time and price move, which would be a very, very good move at least at this point in time. Looking at whether we're overbought and oversold, the NYSE is neutral and the NASDAQ is getting at a point of being oversold. That does not preclude the market or the NASDAQ from trading lower in Monday's trading. It's going to be very, very interesting. It's almost as if you see a move to the upside, you can sell going into the close, because the next day you're going to see a move to the downside. See a move to the downside, you can buy and then ride it back up into this rotational pattern. That's a gambling method that does not produce a high probability trade, but right now that's basically the function of what we're seeing in the markets in terms of price development and market structure. Now, in terms of the percentage of stocks above their 20 and 50-day moving average, you can see what's happening here. This is the percentage of stocks in the S&P 500 above their 20-day moving average. You can see that the trend is down. Percentage of stocks above their 50-day moving average, the trend is down. In terms of the NASDAQ, you can see the trend was up in the NASDAQ. Interestingly enough, you can see that this move here and this move here. Now, what that would tell me is that the potential here is that the higher weighted stocks were carrying most of this. The higher weighted stocks were not carrying most of this, that the lower weighted stocks in the NASDAQ were carrying this move because you got the percentage of stocks moving higher, but then of course turning down in today's trading. And then if you look at this move here, you can see that the percentage of stocks above the 50-day moving average were declining as well. Interestingly enough, this looks like a little head and shoulders top. So if that's the case, then if we break below about the 1900 level in the percentage of stocks above the 50-day moving average, that would suggest potential another move back down to this low here. And that would open up the potential for price to develop down to this level as well. I'm going to keep an eye on that. That's going to be very important to see if that were to happen. And I should point this out. In terms of candles and price development, head and shoulders tops are always easy to spot after they happen. But unless or until you see a break of the neckline and then you see about how far they can go. You can project how far they can go. Then they become valid or real. But right now, this appears to be, but it is not yet. Not until the neckline, which would be this area right around the 1853 area, is broken. In terms of the Russell, you can see percentage of stocks above the 20-day moving average declining, percentage of stocks above the 50-day moving average declining as well. These indicators, this information does not bode well for what we're seeing from an internal perspective. So basically what's happening is that as we're in this area of rotation, the internals of this market are beginning to decline and decline pretty dramatically, which gives me a little bit of concern. And I've said in previous briefings, I am longer term bullish this market, but right now the risk of something larger in degree of time and price to the downside is certainly there, and that probability does exist and should be taken very, very seriously. Have a great weekend, and hopefully we'll see some type of a move either to the upside or a breakout move to the upside or downside on Monday.